करो।
Good evening, all. I request office to play ICI motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Good evening, all. Chairman of the region, CA Ketan Sayya sir, learned faculty, CA Archit Agarwal ji, Vice Chairman of this committee, CA Rajesh Agarwal ji, Treasurer of the WRC, CA Fenil Shah, and Coordinator CA Labdi. We welcome you all to this knowledge series on sector-specific GST related webinars. Since GST has completed 8 years, and now we are not talking on, say, valuation, place of supply, input tax credit, classification, but it is very much important for us to resolve the issues which are sector specific. And for that, we have today learned faculty, CA Archit Agarwal ji. Members, also please take note that you are going to get unstructured CP by attending this program. But for this unstructured CP, you are required to get them to register yourself. WRC will not do anything for that. You have to submit about to get these unstructured CP hours. As today's sectoral topic is real estate, and we all want solutions in real estate, because if it is a TDR, it is FSI, or even joint development agreements, those are the transactions where we need guidance, assistance, and expert views and opinion as well. From our knowledge, we are going to deliver it to the industry as well. So yes, Archit Bhai is going to solve all those issues and queries and give us a path, like Krishna has given a path to Arjuna. So sir, you are our Sarthi today, and we are so much blessed that you are going to give us solutions and giving us knowledge and enlighten us how we should deal with different issues so far as the real estate is concerned. With these words, I welcome you all, and I request CL Abdisha to introduce our learned faculty of the day.
Thank you so much, Bishan sir. And it's my pleasure, my honor to introduce our learned faculty, Archit sir, a passionate professional who has spent over 15 years diving deep into the world of indirect taxes. With a strong academic background as both a chartered accountant and law graduate, Archit sir brings a powerful mix of financial and legal expertise to the table. Being a partner at SS Gupta and Associates LLP, he handles complex GST and service tax issues. Over the years, he has confidently represented cases up to the tribunal level, gaining trust and respect along the way. Not just limited to practice, he loves to share knowledge. He has co-authored a book on the mutuality concept with WARC and frequently writes articles in top tax journals. His words have guided many professionals and his voice has echoed through seminar halls hosted by the CA Institute, study circles, GST departments, and NASIN. From courtroom debates to classroom lessons, his journey is a blend of dedication, learning, and leadership in the ever evolving tax landscape. Archit sir, we heartily welcome you and we are eager to listen you. All chair is yours.
Thank you,
Thank you so
Labdi.
much.
Yes, Archit bhai, please.
Thank you so much, ma'am.
I'm
Thank you so much.
I'm
Vishanji, yes,
waiting.
you are saying something.
Yes, sir. I'm waiting for our chairman to join us, but I guess he is occupied with that forms aggregation program which is going
Okay,
there at
okay.
WRC. But I guess once he join, we'll just have some sort of break.
Sure,
Yes, sir.
sure.
Please carry on, sir.
Thank you for a warm welcome, and thank you to WIRC for giving me this opportunity to present my thoughts. Bishanji, you have highlighted that you are expecting all solutions. I don't know whether I'll be able to fulfill that or not. We are seeing, especially in real estate, we are seeing retrospective amendments. We are seeing contrary judgments of high courts. So I think High Court, Supreme Court is not able to solve. So I'm doubtful whether I'll be able to do it.
Sir,
And
we will give the direction. You will give the direction. That will be also fine.
true.
Yes, sir. We all
Okay.
are learners.
Yeah. Okay, so I'll just share my screen and I'll start with my PPT one. Yeah, I hope it is visible.
Yes, sir.
So this is just an brief of all the topics which I'll be covering today. All are in the beginning, we may discuss some basic aspects with respect to real estate, and then we may also take up along with that all the complexity, all the practical issues which most of the builders are facing. And maybe Q&A we can keep in the end, Bishanji, or how do we have it in the end, right?
Yes, in the end.
Yeah. And chat box is fine, or also
Yeah.
unmute the participants and we can keep it in the end.
Yes.
Okay. So to begin with, basically, when GST was introduced in 2017 on under real estate, the tax rate was 12% for sale of any under construction flat or under construction unit. And that 12% rate was actually after 1/3 abatement. And so the actual rate was 18% and the abated rate was 12%. In case of affordable housing flats, the effective rate was 8%. Now all this was from the period July 17 till 31st March 19. So with effect from 1st April 19, government introduced new rates, and they had an option. Basically, all the projects which were ongoing as at 31st March 19, they had an option either to continue with the old rate or they could have opted the new rate. Whereas all new projects which have started from 1st April 19 had to mandatorily opt the new rate, which is 1% and 5% after abatement. I'll come to those rates and everything. So basically, this is a brief history that after April 19, any new project, you cannot go for the old rate. You have to compulsorily go for the new rate, which is 1 and 5%, 1% in affordable and 5% in non-affordable. We'll discuss that also. These are again the abated rates. The original rate is 7.5% and 1.5%. Now, in this, there is one interesting ruling of Gujarat High Court of Munjal Manish Bhai Bhatt, 2022 Gujarat High Court ruling is there. What happened, basically, the law has prescribed this 1/3 abatement towards land, right? But I'm sure anyone who has seen the financials of any real estate company or someone from the industry will vouch for it that one third is not the correct value of land. Especially if you take example of Mumbai, the land value is the highest component when a builder is selling a flat. So in the case of this Munjal Manish Bhai Bhatt, the SSC argued that one third is a deeming fiction which has been given in the law, and I am entitled to reduce the actual value of land if it is available, which the Gujarat High Court accepted, and it read down the notification 11 by 17 to that extent. It said that where the value is not available separately for the land, the builder can go for one third abatement by opting that option. And if the builder has the value available, actual value of land, then he is entitled to reduce the actual value of land. Now, in this case, actually, it was a single parcel of land on which a single apartment was constructed. So they had the actual value of land available. In case of a multi-story tower or something, maybe the value will have to be then apportioned and all that things. Practically, I have not come across any real estate company which has adopted this. But yes, this judgment is available for those cases where it's a small project where there are only limited apartments are built. Of course, subject to final outcome of Supreme Court, because I don't recollect whether this has been challenged or not, but I'm sure this must have been challenged by the department. They will not accept this. So this is just a brief background on the abatement thing. Now, when we come to the new rates, this is a brief summary which is effective from 1st April 19. Now, there are three type of projects. One is RREP, second is REP, and third is commercial. When we say RREP, it refers to residential real estate project. So in such cases, the commercial space is less than 15% of the total project area. As per RERA, once a builder submits its plan in RERA, and as per RERA, if the commercial space is less than 15%, which may happen like when there are 3-4 shops at the ground floor of the building. In such cases, usually the commercial area will be less than 15%. So such projects are considered as RREP. Now, what is the benefit of being RREP is that the new rate in such cases is 5% even for commercial sale. Even for the commercial units, the sale rate is the GST rate is 5%, and the residential rate is also 5%. And if it is an affordable residential unit, then the GST rate is 1%. Whereas if we go on the ongoing project, then if you see the second column, ongoing, in case of ongoing, the builder has two options. The new rate, which I have just discussed, 5%, 1%. And if they are opting the old rate, they want to continue with the old rate, then it is 12% and 8%. Now, what is the difference between opting old rate and new rate is, of course, the difference in the GST rate. And the second major difference is that in case of old rate, the builder has an option to continue claiming ITC. Whereas once the new rate is opted, which is 5 or 1%, then the builder cannot claim any ITC in the project, and the entire liability also has to be paid in cash. There are certain other conditions. We'll discuss it in later slides once we come to it. Now next is REP project. So REP is a real estate project, REP, where the commercial area is more than 15%. Now in such cases, the only difference is for the commercial units, the GST liability is 12% instead of the reduced rate of 5%. See, when we saw RREP, in case of RREP, the commercial apartments are treated at par with residential apartments. And that is why their GST rate is also 5%. However, in case of REP, the commercial apartments are treated as independent commercial apartments only, because the commercial area is more than 15% in the project. And in such cases, the GST rate is 12%. Lastly, it's a fully commercial project. It is very simple, because the old rates for fully commercial was also 12%, and the new rate is also 12%. There is no change in that. So that continues even after 1st April 19. Now, what happened as at 1st April 19? So when this change was introduced, each builder has to separately file annexure 4 for each project. Each RERA project, the builder had to file one annexure 4 informing which option they want to opt, whether they want to continue with the old rate or whether they want to shift to the new rate. If a builder fails to file the annexure 4, then it was deemed that he has opted for the new rate. And once the option has been selected, whichever option has been selected, then the builder cannot go back, and that same option has to be continued for that entire project. So basically, if a person opts for a new rate, he will start charging 5% and 12% or 1% as the case may be. And if he continues with the old rate, then he will continue with the 12% rate which he has been charging. Now, second important aspect which was required at that time was filing of annexure 1 and annexure 2. Now, suppose a person has opted for new rate in case of an ongoing project. If he has opted for new rate, then he has claimed the credit all along. Since beginning of the project, he must have claimed certain credit, right? So then the law introduced that whatever credit you have claimed, you keep that aside. You calculate your eligibility of credit as per annexure 1 and annexure 2. There were two annexures with the notification 3/19. The two annexures, the only difference was one was for REP and the other one was for RREP. In that, they have given the formula that on what formula basis you have to multiply the total credit, multiply by how much is the billing done, how much is the project completed as at 31st March 19, and all that. There is a detailed formula for that. I'm not going into that. So basically, as per the formula, the assessee had to compute how much is his eligibility, and that is the credit which will be available to that assessee. Now let us take an example. A builder started a project, suppose in 2018, and in 2019, in April, he decided to go for a new rate. Okay. Now in such cases, uh, from 2018 when he started the project till 31st March 19, suppose he has claimed credit of 2 crore rupees. Now, as per annexure 1, annexure 2, whichever is applicable to that project, the builder files that annexure, and the credit eligibility comes to say 1.8 crores. Then the builder was supposed to reverse 20 lakhs credit before September 2019. So basically, he has claimed credit of 2 crore rupees since beginning, but as per the formula, the credit eligibility comes to 1.8 crores, and therefore 20 lakhs credit is to be reversed. Now it could be vice versa situation. He has claim credit of 2 crores. As per the working, the eligibility comes to say 2.3 crores. It is possible in the formula. We have seen for many cases. And because the formula is such, it is not dependent on how much credit you have claimed till date. It is dependent on how much work is completed, how much billing has been done, and all that things. So suppose the eligibility comes to say 2.3 crores. Now the builder has only claimed till now 2 crores. So the law says that additional 30 lakhs credit the builder can claim. So even after 1st April 19, the builder is entitled to continue claiming the balance 30 lakhs credit till he reaches that 2.3 crores. But that credit he will not be able to utilize in that project because as per the new rate scheme, the credit cannot be utilized for paying output liability. The builder has to pay the output liability in cash only. Now that credit of course will get accumulated. He can use it in any other project if he launches, suppose some residential, suppose he launches some commercial project where 12% GST is payable, or some leasing project where 18% GST is payable, or after the building is completed, the builder is maintaining the building for say 1 year, 12 months, 24 months, and maintenance is being collected. Against that also he can use that credit. So this is how the working was required to be done as at 1st April 19. So this I have already mentioned that for each project, the builder was expected to file separate annexure 4, and it was to be submitted physically. Now, there are a couple of practical issues which we have come across. See, suppose it's a redevelopment project where there is a landowner and a developer. Okay, landowner has given the development rights to the developer, and developer has in turn develop the project. Okay, now developer has opted for, suppose, 5% rate. Okay, he has filed annexure 4 and opted for 5% rate. And the landowner is also entitled to certain flats. See, in joint development agreement, what we see is landowner is giving some area to the builder. Suppose the builder is constructing 200 flats, out of which he will give 50 flats to the landowner. That 50 flats landowner will in turn sell it in the market. Okay. So law has prescribed that landowner is entitled to claim that credit of what builder is charging and again charge on the final sale which the landowner will do in the market. Now question arises, can landowner and developer opt for different rates under the same RERA project? Suppose annexure 4 is filed by the builder and the landowner uh, and has opted for new rate, but the landowner wants to opt for the old rate, or vice versa. The landowner does not have any credit, so he may want to opt for the new rate of 5%, whereas builder feels that he has lot of credit in his books because of the construction activity and he wishes to go for the old rate. Is that possible? See, the whole purpose of this annexure 4 filing at that point of time was that for one project, there should be one scheme. Either you are going for the new rate or you are going for the old rate. Uh, it will be very complex situation if on the same project for some of the flats, the landowner he will continue to charge 5%, he will charge the new rate of 5% and the builder will continue to charge 12%. So the whole idea is that for one single RERA registration, both landowner and developer should opt for the same rate. Now, this is of course in the past, what has happened has happened. If there is a scenario where landowner and builder are charging different rates, then there could be some issue in such cases. Similarly, if we see one more example, which I have highlighted in issue 2, a builder has opted for 12% rate and has filed annexure 4. Okay. But now the project is taken over by a new builder. Now, new builder, of course, cannot file annexure 4 now. Okay. So it will be presumed that because that annexure 4 was supposed to be filed during that deadline in 2019 itself. Right. So now the old builder is unable to continue with the project and the new builder wants to take over, but he cannot file annexure 4. So question is whether the new builder will have to compulsorily now pay 5% by treating it as a new project for him, or whether the 12% rate which is opted by the old builder can be continued by the new builder also. I'll just reframe the query. The old builder has opted for 12% rate. That project has been taken over by new builder. Question is, for the new builder, it's a new project. Whether on that basis the new builder has to compulsorily go for 5%, or on the contrary, he has to compulsorily go for 12% rate because the old builder has opted for that rate. So, as I just discussed in the first query, that for one project, the idea is that whatever has been adopted should be adopted by both landowner and builder. And same way, whatever has been opted by the old builder should ideally be continued by the new builder also. So even though the new builder may not be able to separately file annexure 4 now, but for that same project, it has already been filed by the old builder. And therefore that same should be adopted by the new builder and he should mandatorily charge 12% only and not go for 5%. Now, we have seen this practical difficulty for some of our clients. There are couple of AAR rulings. One is of Bangalore AAR and one is of Maharashtra AAR. This is in the case of Godrej developers. I don't know the exact entity name. I think Godrej Projects or Godrej Properties maybe. And that AAR is a reported AAR ruling in which they have held that you have to see that for the project, once the rate has been adopted, whatever has been adopted by a builder, that same has to be continued by the new builder also. Now, as we were discussing, the rate of GST in case of residential apartment is 5%, but in case of an affordable residential apartment, it is 1%. The earlier rate was 8%. Now, earlier, what was the definition? That is prior to April 19. The definition was only that the area of such residential apartment should be less than 60 square meters. Okay. Now, after the amendment, they have introduced two conditions. One is that the area should not be more than 60 square meter in case of metropolitan cities or 90 in case of other cities. And the gross amount charged for such unit should be less than 45 lakhs. Right? Only then it makes sense that it is really an affordable residential apartment and then the benefit should be given. Whereas what was happening under the earlier definition, simply if the area is less than 60 square meter, then the builder was entitled to charge the lower rate, which is for an affordable residential apartment. Now, if you take an example in Valkeshwar also, if a flat is less than 60 square meter, it may run into crores, but that was treated as an affordable residential apartment as per the old definition. But as per the new definition, you have to fulfill twin condition, that is of the area as well as of the value of the flat. Now, what is important in this is, if you see, it says the gross amount charged is not more than 45 lakhs. So, what will get included in gross amount charged? See, the law says that whatever amount for the, of course, for the land value, for the flat value, all that will be covered. If you see subclause 2C, any other amount charged by the promoter from the buyer of the apartment, including preferential location charges, development charges, parking charges, common facility charges, etc., etc. It's important. See, now builder may artificially split the value of flat by saying that the value of flat is only 42 lakhs, whereas I'm charging 3 lakh rupees for parking, 2 lakh rupees for the common area usage, 1 lakh rupees for vastu charges, 2 lakh rupees for garden facing, all that things. So they have stated in the notification itself that gross amount charged will include all these charges which are charged by the promoter from the buyer. And if after that also, if the value is less than 45 lakhs, only then it will be treated as a affordable residential apartment. Now, they have given some examples over here, which we just read: preferential location, development, parking, facility, common facility. Now, whether legal and documentation charges, we see many times legal charges are charged, documentation charges are collected from in the cost sheet. If you see, they give the breakup, infra charges, corpus fund, whether all these charges will be included for computing 45 lakhs. So legal, documentation, infra charges should get included because these are also directly connected with the sale of flat itself. As far as corpus fund is there, it is actually merely a deposit which is collected from the flat owners and then it is transferred to the society. That is not retained by the builder, and therefore that will not get included, in our opinion, in the while computing 45 lakhs. So, but rest of the charges, everything will get included. Rest means I have given this example. There may be n number of other charges which are being recovered by the builder. All such charges will get included. Now moving on to redevelopment, because we have been seeing so many cases of redevelopment. Either it is a society redevelopment or a JDA with a landowner. Then what is the tax liability? Who is liable to pay tax? When it is liable to be paid? So for that, we have to refer to notification 4/19, 5/19, 6/19. These are the three important notifications, apart from, of course, the rate notification 3/19, which provides the rate on sale of flats, which is 5%, which we just discussed. Now, under redevelopment structure, this is just a brief scenario. See, a society or a landowner gives development right FSI to the developer, and developer in turn gives area to the society. In case of landowner, it can be area or area plus some monetary consideration, some cash payment, right? Then the builder sells the flats in the open market and he receives cash consideration against that. So there are three supplies which are involved in this. One is by the society or landowner to the developer, that is giving development rights. Second is given by the developer to the society or the landowner in way of constructed premises. And third is by the developer to outsiders when he sells the premises. So these are the three liabilities which are important in any JDA or a redevelopment, what we call it. Right? Now we'll discuss in each cases who is liable to pay tax, what is the value on which tax is payable, what is the rate, and when is the liability. Now, first important in this is supply of TDR or long-term lease. See, when a landowner is giving you development rights, right? He's supplying you TDR or development rights, or it could be a long-term lease in a project, say 60 years lease, 99 years lease, whatever it may be. And that has been granted to the builder, and the builder is constructing the residential premises on that, and then it is transferring back, suppose some area, constructed area, to the landowner and selling some area in the open market. Now, notification 4/19 provides exemption on supply of TDR by a landowner or any person to a builder promoter if the project, if it is for residential, if the FSI TDR has been transferred for constructing residential apartments. Okay. So to the extent the TDR or FSI is used by the builder for construction of residential apartments, to that extent, there is exemption on the supply of TDR. To the extent it is being used for commercial apartments, there is no exemption. So on that, 18% GST is payable. However, if the TDR or FSI has been given, development rights have been given for constructing residential apartments, to that extent, there is exemption. Now, when we say there is exemption, there is no blanket exemption. The law says that there is exemption upfront when the development rights are given, and then the builder is liable to pay on that. If we come back on this slide, see, the development rights is given by landowner or the society to developer. Okay, so they are the supplier. However, the liability on this is casted on the builder to pay under reverse charge mechanism. And for that, they have given a formula. See, if we see, there are two methods which are given in notification 4/19. These two methods are to determine the tax liability which a builder needs to pay under reverse charge mechanism on account of purchase as in on account of the development rights which he has received from the landowner. Now, what are these two methods? If you see in method A, the GST payable is equal to value of TDR into carpet area of apartment remaining unbooked upon total carpet area of the project into 18%. I'll discuss both these formulas. And then method B is unsold apartments on the date of OC multiplied by sale nearest to OC date into 5%. So basically, there are these two formulas, and the tax liability has to be determined on OC date by computing the tax as per these two formulas, and whichever is lower, that has to be paid by the builder. Okay, now let us take an example of both these methods, how the tax liability is to be computed. See, suppose the development rights granted by landowner is 1 lakh square feet. Okay. And the consideration which is being paid by the builder is 10,000 square feet he will construct and give it to the landowner, and 2 crores area, 2 crores revenue share. So basically monetary consideration of 2 crores is there and 10,000 square feet area is being given. Now sale rate nearest to DR. This is also known as first sale price. Basically, after the agreement has been entered into, the first sale price by the builder to any flat buyer in open market who is an unrelated party, if suppose that is 25,000 per square feet, and the sale rate nearest to OC date, suppose OC comes after 2 years, 3 years, at that point of time the sale rate was 35,000 per square feet. In such scenario, what will be the tax liability under method 1, method A and method B? Okay. Now, one more assumption is that unsold area is 15% in the project. That is 30,000 square feet remains unsold out of total, say, 2 lakh square feet. if you see in the serial number 1, we have taken the example that development rights received by the landowner is 1 lakh square feet, and suppose there is some other potential land potential which the builder explores by paying BMC premium and all that thing, and the total project area is 2 lakh square feet. Out of that, 15% remains unsold. So now the taxable value under method A, see, we'll come back to now this formula. Method A, value of TDR multiply by. So first is value of TDR. Okay, so how do you come to value of TDR? So for that you have to multiply the first sale price multiply by the total area given to the landowner. So the total area given to the landowner is 10,000 square feet. First sale price is 25,000 per square feet. So that comes to 25 crores plus 2 crores revenue share. So total 27 crores is the value of TDR. Okay, so if we see row 7 in method 1, the value of TDR is 27 crores. Then when we come to row 8, before that we'll come back to the formula. So formula says value of TDR multiply by carpet area of apartment remaining unbooked upon total carpet area. So basically unsold percentage. How much is your unsold in the project? That percentage multiply by 18%. So once we come back on this value in row 7, we have 27 crores, which is 25 crores plus 2 crores, right? On that, we will apply 15% is unsold area multiply by 18%. So that will give the GST tax liability of 72 lakhs 90,000. I hope this is clear. Now, when we come to method B says unsold apartments on the date of OC multiply by sale rate nearest to OC date into 5%. Okay. Now in this, if you see, your sale rate nearest to OC date is 35,000 and your unsold premises is 30,000 area. Okay. So 30,000 multiplied by 35,000 will give you 105 crores. On that, 5% is the GST liability. So that comes to 5.25 crores. Now, the law prescribes that lower of the two values should be adopted. So 72 lakh 90,000 is the lower value. So that will be the GST liability in this case on the builder. So I'll briefly summarize again. Basically, when a builder is getting development rights from a landowner, the builder is liable to pay GST under reverse charge mechanism on OC date. Okay. There is upfront exemption under 4/19 when the FSI TDR is being used for construction of residential apartments. If it is partially for residential, partially for commercial, then proportionate value has to be taken as exempted, and balance proportionate, which is for commercial, on that 18% full GST is payable. Now, when we come to residential, on that the liability is on OC date, and for that the builder has to compute the liability as per two methods, method A, method B. Okay, we have seen one example of method A and method B. In first method, you have to compute the area given to the landowner, multiply by first sale price, multiply by the percentage of unsold area, multiply by 18%. In second method, you have to simply take how much is my unsold premises, multiply by last sale price into 5%. So out of the two, whichever is lower, that is the tax liability of the builder. Okay. Now, if I summarize this, you take an example of a project. Suppose there are 100 flats in a project, out of which 20 flats I am giving to the landowner, 80 I am selling in open market. Out of those 80, suppose 10 flats remain unsold. So 70 I have sold before OC. Now, technically, the government wants to ensure that they get one-time GST on the entire project, on the entire 100 flats. How that is being taken care of is the 20 flats which the builder will give to the landowner, on that builder will charge 5% GST, and landowner will also resell and charge 5% GST or whatever. The 70 flats which the builder has sold before OC, Naturally, the builder will charge 5% GST when the sale is being made before OC, and on that also government has collected. Now the 10 flats which remain unsold, if you see this formula in method B on unsold flats, if you multiply by the nearest rate, multiply on the OC rate, multiply by 5%, government will get that. And if your value comes lower as per method A, then on that value, the government will get the tax. So technically, on the entire project, the government is getting the tax once, which is their actual intention after 1st April 19, that they should get 5% GST on the project, and they are not allowing the credit to the builder. So that is how the whole idea is, that the end customer will be charged only 5% GST. See, earlier what was happening, before April 19, we used to see that after OC, if any sales takes place, then the builder was at a huge advantage because the 12% GST was gone, right? He's paying 12% GST till say 3rd of July, and on 15 July he gets OC. So after that, he need not pay 12% GST on the flat sale sold after that. Of course, credit reversal was there, but credit reversal is hardly 3-4%. So what was happening, that the sale prices were being jacked and all that things. Now, if you see, it is very crystal clear for a builder that if a flat is sold before OC, he will collect 5% and pay. If it is sold after OC, then also as per method B, he has to pay 5%. So to that extent, of course, he can add his markup in the sale price. But at least there is clarity in the law. So this takes care of the intention of the government that on the full project, they get the GST at approximately 5% GST on the entire sales. This is notification 5/19. This we have already discussed, that in case of transfer of development rights or in case of long-term lease, which is more than 30 years lease, when it is granted by any person to the promoter means a developer builder, then in such cases, the liability is casted upon the builder promoter to pay under reverse charge mechanism. Now, what is interesting is there are certain rulings of the High Court in which some observation has been taken, which we will discuss now. If we see Srinivas Realcon Private Limited, a recent judgment of Bombay High Court. So in this case, it was a classic case of transfer of development rights, basically from a landowner to a builder. On which, as per the normal understanding, everyone was paying under RCM, but in this it was challenged that this transfer of development rights, the entry which is there under this clause 5B of RCM notification, it says services supplied by any person by way of transfer of development rights or FSI. So Bombay High Court has held that transfer of development rights or FSI would only relate, I am just reading it from the relevant portion here, would relate to a TDR as contemplated by clause 11.2.2 as per the Unified Development Control and Promotion Regulations for the state of Maharashtra. Right. So in that, if we see, they have defined the word TDR or FSI. The High Court held that in case of a development rights agreement, I am not transferring a TDR to the builder. And then the court held effectively that this entry will not fall under this RCM entry, which is covered by 5/19, and tax is not payable by the builder. So what is the effect of this judgment? Basically, that in case of all JDAs, because in all the JDAs, the development rights are given by the landowner to the builder, or even if you see a society redevelopment project, the society gives development rights to the builder. All such cases will come out of this notification, RCM notification, and technically tax will be payable by the supplier under forward charge mechanism. So I'm sure this will be challenged by the department in Supreme Court, but as of now, this view has been taken by Bombay High Court. And then if we see, there is one more interesting judgment of Nirmal Lifestyle, This is only a stay judgment given again by the Bombay High Court. Now, in this case, what the court held is that they went on to held that in case of a revenue sharing agreement under a development right model only, they said there is no transfer of development rights, and even if it is, I'm just reading the highlighted portion, even if one would assume that there is a transfer, the same would be immovable property and not taxable under GST law. So in Srinivasa Rayalkon, the court held that it is not covered by the RCM notification entry 5B. Okay, but in Nirmal Lifestyle, they have relied on Gujarat High Court judgment. I'll discuss that also in next slide. So they have relied on Gujarat High Court judgment and they have held that it is a transfer of immovable property and not taxable at all. So not even FCM or RCM, it is not taxable at all, which has been held by Bombay High Court. It is stay judgment. It has not attained finality. Now, what is this Gujarat High Court judgment? Gujarat Chamber of Commerce and Industry. Now, in this case, the issue was with respect to assignment of leasehold rights. See, we see plot of land which are given by MIDC, GIDC, and all these authorities for say 99 years lease, 999 years lease. Okay, now there is a company X which takes these premises on long-term lease from the government, right? GIDC or MIDC or any other state government authorities. They suppose that company X uses that premises say for 30-40 years and then it decides that I need not continue with this premises. It will assign the leasehold rights for the remaining period to company Y. Okay. Now, once these rights are assigned to company Y, then the GIDC or MIDC, they will amend their records and company Y will be recorded in their books and there will be a transfer fee. Company Y will pay an X amount upfront amount to company X and they will pay transfer fee to the authority, which is GIDC say. So in such case, the question was whether the assignment of leasehold rights will attract GST liability. Now in this case, Gujarat High Court held that such transaction is equivalent to, see, basically if we see the assignment of leasehold right, it is also a benefit arising out of land, right? So all the benefits which are arising out of land is treated as immovable property. Under service tax, the exclusion under service tax law was to an immovable property. However, when we come to GST, the exclusion is under Schedule 3, the exclusion is only on land. It is not on immovable property. But Gujarat High Court has interpreted that whenever a benefit arising out of land, which is this assignment of leasehold right, a leasehold right which the company X is holding, is a benefit which is arising out of land. And when the same has been transferred by company X to company Y, that will also be covered by the clause 5 of Schedule 3 and there will be no GST on that. So if we see applying the same logic, in this case, Nirmal Lifestyle Bombay High Court, which we were discussing. So Bombay High Court has applied the same logic even for development rights. And they have held that no GST is payable on the same. As mentioned earlier, this is only a stay judgment. It is yet to attain finality. So technically, if we see any benefit which is arising out of land will get covered by this judgment of Gujarat High Court. And on all those things, there will be no GST. So in short, on development rights also, that view can be taken. But having said that, as I mentioned earlier, this Srinivasa judgment may also be challenged, this Gujarat High Court judgment, all these are very recent rulings. So we should wait for the final outcome of these rulings at Supreme Court level. But presently, these are the favorable judgments which are available, which a builder can benefit from. See, what is important is that if you see a residential project, right? In case of residential project, the builder is not getting any ITC. In fact, the liability which we discussed is say 5% of the unsold inventory at the end of the project, which goes from the builder's pocket. So a builder may wish to take an aggressive view because whatever is the savings is from his own pocket, right? Suppose suppose there is some ruling in which says that there is no GST liability on sale of residential units. Like in service tax, we had that judgment of Delhi High Court. I forgot the name. Individual Suresh Kumar Bansal. So that Suresh Kumar Bansal, one Delhi High Court ruling had come in service tax era, which held that that there is no service tax liability on sale of under construction flats because the four limbs of taxability are failed and therefore the builder need not pay any service tax. Now that when that judgment came, no one really took it seriously because a builder will not take risk on behalf of a customer by not charging GST and by not charging service tax, and in the end the when the liability will come, then the builder will have to pay from his own pocket, right? But when we come to such cases of development rights or this thing, over here the tax is to be paid by the builder from his own pocket, right? And there are two favorable rulings of high courts. So if one wants to take an aggressive view, basically an informed decision can be taken, because there should not be any penalty if at all these rulings get reversed in future, because one has relied on the high court rulings. But yes, interest liability will be there if at all it comes in future. Now, next important aspect is the when is the time of supply. Basically, the liability, when is the liability to pay the tax. So we discussed 4/19 notification, which was the exemption entry, 5/19, which is the RCM entry, and then 6/19. 6/19 specifies when is the tax liability to be paid. Now, in the beginning, we discussed there are three liabilities. One is with respect to development rights received by the builder from the landowner or society. Second is the area given by landowner to the society or the landowner. And third is the area sold by the builder in open market. Now, the area sold by the builder in open market is a very simple and straightforward case where, on the basis of slab wise, in my agreement it is mentioned on fifth slab I'll collect 10%, on 10th slab I'll collect 20%, and all that basis the time of supply will be that slab wise payment. Now, for the first two liabilities, which is development rights received by the builder and the area given by builder to the landowner or the society, okay, the two liabilities both are to be paid by the builder. Now, for that, what is the time of supply? See, first scenario, supply of development rights. Now, the law says if the consideration is in the form of consideration given to the landowner is in the form of construction service, basically area is given to the landowner, which may be residential area or commercial area, then the liability is on OC date. So the builder has received development rights, he is giving construction service, so the liability on development rights is on OC date. Second is, I have received development rights or say long-term lease and I'm giving cash consideration. There is no area share. There is cash consideration paid by builder to the landowner. So if it is a residential project, then the liability on this DR is also on OC date. Now, when we come to third scenario, if I am receiving development rights or long-term lease and there is cash consideration against in a commercial project, so I have used the development rights for a commercial project, then the liability is upfront on the date of agreement. This third row is very important. Basically, if I am receiving development rights from a landowner and I am paying revenue share or upfront cash consideration for those development rights, and I am constructing a commercial project, then the GST liability on that development rights arises on the date of agreement itself. Further, it is full 18%. Notification 4/19 is not applicable exemption entry, and full 18% GST is payable on that. And fourth is basically construction services given by the builder to the landowner or society. On that also, the time of supply is OC date. Okay, so we have seen three scenarios where it is OC date. DR given by the landowner to builder. If the landowner is getting constructed premises in return, whether it is residential or commercial, the liability is on OC date. If the landowner is getting cash consideration in a residential project, again OC date. But if it is getting cash consideration in a commercial project, then the liability is upfront. And lastly, the construction services given by the developer to the landowner, on that the liability is on OC date. I hope this is clear. Now there are some issues in this, some practical queries which may come up. See, first one, whether a view can be taken that no GST is payable in case of receipt of development rights from society. Now see, many societies which go for redevelopment, they appoint a builder, and the builder in turn will give some developed area to the society and he will sell the free sale area. Now question is, one is on the basis of these notifications 4 by 19, 5 by 19, 6 by 19, I pay as a builder, I pay GST on the unsold flats on OC date on account of development rights which I have received from the society. Now, can a view be taken that when society is giving development rights to the builder, at that point of time, the society is not giving this in the course of its business. The society is not in the business of giving development rights. Actually, they are giving the development rights for their own sake to get a developed premises. They are not into this business. A landowner may be in the business of giving development rights, getting constructed premises, selling those constructed premises in the market. But when it comes to society, society is not giving these development rights in the course of its business, right? In fact, society is not doing any such business. So when we see the definition of supply, supply covers any activity which is done by a person in the course or furtherance of its business, right? So we can take a view that society is not in the course, society is not giving the development rights in the course or furtherance of its business. Now the second question which may come up is that the liability is not on the society. The liability in such case is on the builder under reverse charge. And for builder, the development right is in the course or furtherance of its business. So what is important over here to understand is, see, the tax liability has been shifted from the supplier to the recipient, which is the builder. But for the purpose of supply, whether it is a supply or not, that has to be seen in the hands of the supplier only. Section 7 supply definition, we have to see whether it is a supply and whether when we say it is a supply, whether the activity is in the course or furtherance of business of the supplier. Once it is determined, yes, it is a supply, then the next step comes, who is liable to pay tax, right? Now, in the beginning, if you may all recollect, that when GST was introduced, section 9(3), the liability there was imposed that in case of any supplies received from unregistered person, right, the registered person is liable to pay tax under reverse charge mechanism. So I think from July 17 till October 17, these provisions were there that if I am a businessman, I am registered under GST, and if I take any supply from any unregistered person, then I am liable to pay GST under reverse charge. Now, during that time, there was one circular which had come, which was clarified by the board, that suppose an individual person, suppose I have certain gold with me, I have a gold chain with me, I go to a jeweler to sell that gold chain, right? I am in my individual capacity going to a jeweler and giving that gold chain. Now on gold, there is 3% GST. So the question was whether the jeweler is liable to pay GST under reverse charge mechanism because it is receiving gold from an unregistered person, right? So in that clarification, what they have what they have clarified is that when an individual is going to sell his gold to a jeweler, then it is not in the course or furtherance of business of that individual, and therefore it is not a supply in the hands of that individual. Once it is not a supply in the hands of the individual, then even the jeweler, who may be in the business of buying and selling gold, is not liable to pay GST under reverse charge basis. So that circular will apply even in the present case, that once it is not a supply in the hands of society, then even the builder is not liable to pay under reverse charge mechanism. Now, we have been taking this view for many of our clients. Of course, it is yet to be tested, but this may be subject to litigation by the department. But in our opinion, it's a very strong case that whenever development rights are received from a society, then the builder need not pay any GST under reverse charge mechanism. Now, second issue, just one. Second issue, whether a view can be taken that no GST is payable on area developed for society or landowner on the basis of Vasanta Green's judgment. Now, see, what is Vasanta Green's judgment? Under service tax, there is Tribunal Hyderabad judgment in which there was similar tri-party transaction wherein a landowner society has given development rights to builder, builder has in turn given area to them, and then builder has in turn sold free area in the market. The question was that the area given to the existing landowner, tenant, society, whatever, on that whether service tax is payable. So what the Honorable Sistat held, that this area which you are giving to the society members or the existing tenants, the value of this has been incorporated in the free sale area, right? The cost of that has been incorporated in the free sale area which is sold in market on which service tax is being paid. So these flats which are given to the existing society members are actually intermediate stage, and the final product is the flats which I sell in the open market, and therefore there is no need to pay service tax on that. There is one Mumbai Tribunal judgment of Ethics Infra. After relying on Vasanta Greens, there are 2-3 more judgments of Hyderabad Sistat. Now all these judgments are pending before Supreme Court. Now that same logic can be applied under GST also. That when I'm giving some area to the existing society members or tenants or whatever, that value as a builder I'm adding in my final sale price, which I'm selling in the open market, on which GST is being paid. And therefore on this intermediate stage, I need not pay any GST. Third, what will be the value of flats given to society members in case of society redevelopment where the flats sold in open market are having altogether different amenities and different construction quality? See, we discussed that there are 3 liabilities. One is development rights received from landowner to the builder. Second is area given by builder to the landowner. Now on this second liability, area given by builder to landowner, which is construction services, the law prescribes that liability is to be paid on OC date, but the value on which it is to be paid, that is the first sale price. So after the agreement, nearest to the date of agreement, the first sale price is the value on which the builder has to pay the tax. So same will apply even in case of society redevelopment. A society is giving me development rights and I am giving in turn constructed area. So question comes, my first sale price may be much higher. Okay, but can I take a view that my first sale price is with respect to a building which has a different amenities and construction quality? Now suppose there are 2 buildings which are constructed by the builder. One is given to the existing members, the other building is given to new flat buyers. If the builder is able to show that the first building which is given to the society members has different amenities, suppose they do not have access to the clubhouse or garden which the new building has, suppose their quality of construction, the tiles which I have used, the flooring which I have used, the marbles which I have used, the fittings which I have used in the bathroom, I am providing suppose air conditioners or modular kitchen in the new flats. In the existing society flats, I'm not giving all these facilities. So if I can prove and justify that the amenities or the quality of construction of the existing flat owners is different than what I'm giving in the open market, then I can challenge that first sale price is not the correct valuation for that. In such cases, if we go as per the valuation rule, then rule 30 will apply, which is cost plus 10%. Then in such cases, I should adopt the value of cost of constructing those flats, add markup of 10% and pay GST on that value. Next is a very burning issue, which almost all real estate companies must have faced. See, a builder will take a development rights from a landowner or whatever, or he may have his own land. But on that, he will also add extra FSI by paying premium to the BMC, right? Then there are other charges which are being paid to BMC. Of course, the premium is also different type of FSI, staircase premium, balcony FSI premium, and there are fire NOC charges. Then there are some other permissions. All those charges are being paid. Now, what is happening on all these charges? The department has been taking a view that all these are liable to GST under reverse charge mechanism, and builder is liable to pay GST on the same at the rate of 18%. Now, there is this exemption notification. I'll just read the relevant entry, notification 14/17. In exercise of the act conferred by so and so section, the central government on the recommendation of council hereby notifies that following activities or transactions undertaken by central or state government or union territory or any local authority in which they are engaged as public shall be treated neither as supply of goods nor a supply of service, namely services by way of any activity in relation to function entrusted to a panchayat under Article 243G of the Constitution or to a municipality under 243W of Constitution. So basically, when a local authority is supplying you any is making any supply or doing any activity which is entrusted to it and which falls under 243G of the Constitution or 243W of the Constitution, then such activity will neither be treated as supply of goods nor supply of service. Now, if we see 243W, it's a long entry, and in that there are various clauses. I have not covered all. Entry number 1 and 2 of that is relevant for us. One is urban planning, including town planning, and second, most important, is regulation of land use and construction of building. So, when BMC is doing any activity to regulate the land use or construction of building, and when it is acting in that capacity, then it is covered by this entry. See, when a builder goes to BMC and pays extra premium to get the FSI, staircase premium, balcony premium, all that we discussed, all these are actually for regulating the land use. If we take an example, suppose there is a small road having a width of say 50 meters. You cannot expect a 70-story tower, 80-story tower on that road, right? You cannot expect BMC to just simply give you FSI by paying the premium, because they have to regulate that if on that area a huge tower is constructed, then whether the facilities, whether the road capacity is there to manage the traffic, whether there is hospital in that area, whether there is schools available in that area, all that is kept in mind. And on that basis, if we see in Mumbai, at least the DCR rules are published, development control regulations. Time and again they publish it by keeping in mind on the basis of the area where development activity takes place. So all these activities are to regulate the land use. You cannot just simply misuse the land and construct anything anywhere. So that is why whenever such premiums are paid to BMC or whenever any permissions are taken from BMC, all that will ideally get covered by this exemption entry, and there will be no GST on that. But however, at least we have seen all our real estate clients in which they have received show cause notices raising huge demands into crores, because these payments are also very huge when we go and when a builder goes and buys these pay for these activities to BMC, then they have to pay into huge crores of amount on, and on that 18% GST is being demanded. In fact, in few of the cases, even on the property tax which is being paid by the builder, on that also GST at the rate of 18% has been demanded. So all these cases we have been contesting. In fact, some of the cases are we have filed a writ also before Bombay High Court, and in few cases the writ was dismissed on the ground of alternate remedy. In few cases the writ is pending. They have said that the issue is pending and it will be decided. So there is another technical issue. I'll not go into detail. Another technical issue which is pending before Supreme Court. So the Bombay High Court has held that once that issue gets decided, we'll decide this matter with respect to taxability on under RCM after that. So in nutshell, this is a very burning issue. Lot of litigations are going on this issue, but uh, in our opinion, this is all these demand should get set aside, because the whole purpose of this exemption entry will get failed if 18% GST is levied on this. Now, let us take an example. Suppose a builder is constructing a mall which is for renting purpose. Okay, and I am a landowner. I am giving development rights to the builder, and if he is constructing a mall for renting purpose, then whether RCM will be applicable or FCM will be applicable. See, when he is constructing a mall, it will not be registered under RERA. Okay. Now, registration under RERA is not important to determine RCM liability. If we see 5/19, see the RCM entry says supplier of service, any person, recipient of service, promoter. So what we have to see is if the recipient is a promoter, then RCM is applicable. Okay. Now, when a builder is constructing a mall, he may not register under RERA, but whether he is a promoter or not, that is what is to be seen. Now, promoter term has been also defined under RERA, which I have highlighted relevant portion. If we see, for the purpose of selling all or some of the apartments to other persons. Then if we see clause 4, such other person who constructs any building or apartment for sale to general public. So everywhere they have used the word sale. So when a mall is being constructed, the builder is not technically a promoter. And in such cases, the landowner will pay the tax under FCM and not builder will not pay under RCM. Okay, if we modify this, suppose a builder is constructing 2 floors of mall, and after that 2 floors there is a residential apartment of say 10 stories. Then what will happen in such case? Now over here also what will happen, under RERA only the 10 floors of the residential apartments will be part of RERA, and the builder will be treated as promoter only for those 10 floors. For the first 2 floors which is being used for construction of mall, for those area the builder is not a promoter, and therefore to that extent proportionately the liabilities on the landowner under forward charge mechanism, and on the balance area the liabilities on the builder under reverse charge mechanism. So what is important is a project may or may not be registered under RERA, but if the builder is a promoter, that is, it will come when he is using it for the purpose of selling the apartments or for selling commercial units, only then he will be treated as a promoter. Now this takes care of all the relevant notifications which we discussed, 4, 5, 6. Now coming back to the rate entry, the new rate which has been introduced, which we have been discussing, that from 1st April 19 the new rate is 5%. So for that 5% rate there are certain conditions. That tax shall be paid in cash. Okay, this I'm sure everyone must be aware that a builder is not allowed to use credit for paying its output liability. Okay, we also discussed that the transitional credit at the time of filing Annexure 1 and 2 on 1st April 19, a builder may be allowed to claim more credit, but that credit also cannot be used for making payment of GST at the rate of 5% or 1%. Only if a builder is continuing with the old rate, the credit can be utilized for making the payment. Now, next important condition is now in order to make sure that where the builder is paying 5% and not getting input credit, it should not happen that builders start taking services or goods only from unregistered persons to avoid their cost of GST. So that is why there is a condition that the 80% of the supplies must be taken from registered suppliers only for all input and input services. So that calculation has to be done for each project. 80% of supplies must be obtained from registered suppliers. If not, then the builder is liable to pay 18% GST under RC. Now, what is important in this is that while computing the 80% calculation, that what all supplies I have received, suppose an architect has given me supply, there is a contractor, there is a supplier of cement, steel, and all that things. So while computing that how much I have received from registered person and unregistered person, the value towards TDR, what you have got, FSI, long-term lease, electricity charges, any high spirit, diesel, motor spirit, that is all okay. So all these basically the major chunk, TDR, FSI, long-term lease value, all these value has to be excluded while computing the 80% value. Because this may be received from unregistered persons also. Like you are getting FSI, TDR from a society for redevelopment. The society may be unregistered. So that value will not be computed while computing 80%. Now, next important is if cement is received from unregistered person, then the benefit up to 80% is not available of beyond 80%. So basically, if cement is being received from an unregistered person, then even if your otherwise total supplies are more than 80%, to the extent of cement, the builder has to pay under RCM, and that to 28%. Because on cement, the liability is 28%, not 18%. So that is also excluded from the 80% calculation. This is then part of that only. Now, next important thing is that ITC, the notification 3/19 says that in the notification itself, it has been mentioned that whatever is ineligible credit, so whatever is the credit in that project has to be declared in row 4D2 while filing GSTR 3B. Practically, I have not seen any builder computing how much is my credit which I have not taken and then reporting it separately in GSTR 3B. But the notification prescribes that you compute how much is your ITC which you have not claimed. Because see, while passing the entry in the books, suppose a builder has received a invoice from a contractor 100 rupees plus 18 rupees. Entire 118 has been expensed out. No one calculates separately 100 rupees and then 18 is passed as credit item and then that credit is reversed. But anyways, as per the notification, that 18 rupees has to be declared separately in 3B. Now, what is interesting is that this 4D2, which is mentioned in notification 3 by 2019, which is part of 11 by 2017 rate notification. Now that row 4D2 is actually amended. The form has been amended, GSTR 3B, in July 2022. So now that 4D2 reads ineligible ITC under section 16(4) and ITC restricted due to place of supply provisions. So question comes whether still I continue to show it under 4D2. So actually this, as I said, this was introduced in 2019, right? Then the form got amended in 2022, but they have not made that change in that notification. But now 4B1 is actually the correct row in which it should be reflected in GSTR 3B, which is like ITC, which is reversed, permanently reversed, because it is not eligible. Second issue, for example, suppose a company has incurred expenses like land survey, consultation charges, etc. for a proposed real estate project. Now the company is not aware whether the project will be residential or commercial. What should be the treatment of ITC? See, many times what happens that the company is planning that we have a land parcel and we will develop this. They may not decide as on today whether to develop it as a commercial premises, which may, so if you develop a commercial premises, the builder will charge 18%, 12% GST. and will be entitled to all the credits. Suppose the builder constructs a residential premises, then none of the credits are available. Suppose it is REP project, partial 40% is commercial, 60% is residential, then 40% credit is available. So what should be the company's stand? They are incurring the various charges, land survey charges, there are some consultants which are hired, there may be some land leveling charges. All such charges may be incurred before the actual project kicks in and before actually the company has taken a call what project will come. So in such cases, it is suggested that what the builder can do is they can claim the credit. Okay, there will be no output liability, so there is no question of utilizing it. In fact, it should not also be utilized for any other project. Suppose they have any other project in that same entity, so it is suggested not to be used till the time there is clarity on what project is coming on this land. And if the if finally suppose the project is executed, and if it is a residential project, then whatever credit has been claimed must be reversed by the company. If they decide to build a commercial project, then they can continue and then they can utilize that credit which they have claimed. So in short, it is suggested that credit can be claimed, but it should not be utilized. Once there is clarity, once the deal is done, after that only the company should take a call of determining whether they should utilize the credit or not. Now, all this was with respect to rate and the liability. Second issue is with respect to reversal of credit. See, this is a brief chart that what will happen in case of REP and RREP in ongoing project. In a new project, it is very clear the builder will charge only 5% GST. They will not claim any credit. If it is a commercial project, they will charge 12% GST and they will claim all the credits. But what happens in case of ongoing projects which were there as on 1st April 2019? So there was two options. One, they must have opted for rate change. They must have opted for no rate change. That means they continued with the old rate of 12% or or 8% in case of affordable. Now that can be in case of REP, that can be in case of RREP. Now I'm not going into detail, but in nutshell, the process I have explained earlier, that builder which has opted for old rate, there is no change for them as at 1st April 19. They continue to claim the credit on the date of OC. They have to reverse the credit as per the unsold area on area basis. Where the builder opted for a rate change, they were supposed to file Annexure 1 and Annexure 2 for REP and RREP. And according to that annexure, they were supposed to compute how much is the credit eligible to them. If whatever they have claimed is more than that, they were supposed to reverse that credit before September 2019. If their eligibility comes higher, they were supposed to claim it further till they achieve that eligibility. And then every month they will not claim any credit after that because they have opted for new rate. This is the nutshell of this entire chart. Now, apart from sale of any residential or commercial apartments, very common business activity in case of real estate is plotted development. So, in case of plotted development, there is basically a huge parcel of land. What the builder will do is it will cut out some small parcels of land. It will develop it in the sense it will level it and it will make it usable. And those plots are sold to individual customers. They can then build their own houses, bungalows, whatever they want to build it. So what the builder usually charges is for the plot of land. Then there are some directly connected activities with the plot like leveling charges, laying drainage lines, electricity lines. All these are necessary, like the internal roads for reaching your plot. All these are necessary for using your plot. And then there could be some other charges like clubhouse, garden, swimming pool, or all these facilities may be there one common for the entire plot of land. For that also the builder may charge, right? Now, earlier there was a lot of dispute which was going on. Department was treating that even the sale of plot is a supply of service, because there is inherent service activities like leveling and giving drainage line, sewage line, all these things. Then there was one judgment of Narnia Constructions, in which Supreme Court has held that plotted development is a supply of service. So department used to quote that there are many AAR rulings which says that in case of plotted development, it is a supply of service and full GST is payable on that. But what is important to understand is that Narnia Construction judgment of AAR has been, not AAR, of Supreme Court. Narnia Construction judgment is with respect to Consumer Forum. It is with respect to Consumer Protection Act. So over there, the Supreme Court has taken a view that it is a supply of service, because once it is a supply of service, then a case under Consumer Protection Act can be filed. Now that logic cannot be applied under GST. Under GST, the definition of service is there, the definition of supply is there, Schedule 3, exclusion of land is there. All that has not been discussed by Supreme Court. It is from that angle Supreme Court has held that it is a supply of service. So anyways, thankfully in 2022, they issued a clarification in which they have clarified that all the basic activities along with the plot of land, all those things will be treated as supply of land, and there'll be no GST on that. But other amenities which are being given by the landowner, like I said, clubhouse facilities, garden, swimming pool, and all those things, all those are additional activities on which 18% GST will be payable. Now, many a times a question comes that how to compute the value, because a builder may give single rate. Suppose a builder may charge 1 crore rupees, which includes everything, the plot of land, all these charges for using the land, and all these charges for using the clubhouse facility, garden, and etc. So how to bifurcate the value? Now, if the value bifurcation is not given in the agreement, ideally it is advisable that in future agreements you should have the value bifurcated. But if it is not given, then the next method to value is Rule 30, where you have to value the cost of providing these facilities, these other facilities, clubhouse, maintenance, garden, and all these things. And that cost plus 10% should ideally be your value on which 18% GST will be payable. So suppose a plot is given to a customer for 1 crore rupees, and the cost of constructing the other facilities area is say 20 lakh rupees. So 20 plus 10%, 22 lakhs should be treated as cost towards other things on which 18% GST will be applied, and 78 lakhs should be treated as cost towards the plot of land on which there will be no GST. That is a view which can be taken, and which has been followed by actually many players in the industry. Now, in case of plotted development also, there could be a scenario where development rights are being given by a third party. So usually in case of plotted development, we'll see that the builder may have its own land. But if it doesn't have its own land, then there is a possibility, in some cases we have seen, that they get development rights for such land. Now question comes, and in turn in turn of that, they will get some plots from the builder, which the landowner will sell in the open market. They will also get that facilities to use, that is the clubhouse and all those activities. Now, in such cases, whether the developer is liable to pay GST under RCM, that is the question, for the development rights received for plot of land. See, even in case of plotted development, the developer is treated as a promoter. Okay, so once we saw 5/19 notification, once there is a promoter and the development rights are transferred by any landowner to the promoter, then the promoter, that is the builder, is liable to pay GST on that under reverse charge. Second question is whether exemption under 12/17, which has been amended by 4/2019, whether that exemption will be available. Now that exemption is for construction of residential apartments. In case of plotted development, there is no construction of residential apartments, right? There is only plot of land which is given back to the various customers and to the landowner. So that is why 4/19, which is 12/17 also notification basically, that will not be applicable, exemption will not be available, and GST will be payable on full value. Even 6/19, which shifts the liability to OC date, that will also not be available in case of plotted development, and liability will be paid upfront actually on the date of agreement itself. Now, next very important issue, cancellation of apartments. It is very common in real estate industry. We see that flats are booked and then subsequently it gets cancelled. Now, in such cases, there may be some advance given which the builder will forfeit, or if there is no advance available, the builder may have billed, and the builder may have kept on billing and paying GST on that, and subsequently the customer does not turn up at all, then finally the flat is cancelled suo moto by the builder. So what will happen in such cases? Whether 18% GST is payable on the cancellation charges, or separately I have to pay 5% GST, what will be the rate of GST on that? If you see CBIC circular of 2022, in this they have clarified that in case of cancellation fee or any forfeiture charges, the tax liability should be assessed on the basis of the principal supply. Whatever is the principal supply, same logic should apply even for the forfeiture charges or cancellation charges. So in such cases, the principal supply is taxable at say 5% or 1%. Then even for cancellation and forfeiture charges, that same 5% or 1% rate will apply, not 18%. Now, secondly, what is important is when I billed to the customer, or when I received, suppose say 10 lakh rupees advance as booking amount, at that point of time, I have paid 5% GST. And then the customer cancels and I forfeit the entire 10 lakh rupees. So I have paid 5% already GST and need not pay it again, right? In case of Lemon Tree Hotel judgment of 2019, it was under service tax. What happened, that customer had booked a hotel and room was booked and then rooms got cancelled. So question was whether they have to again pay service tax on the cancellation charges separately at full rate. So tribunal held no. See, on the booking itself at abated rate, they have paid the service tax. Now again on cancellation, they need not pay again, that too on full value. So same logic will apply over here. Once you have paid the tax, there is no need to pay it again. Yeah, very recent one. Now what will happen, suppose as a builder, if you have already paid the tax, okay, now you may have collected say advance of 10 lakhs and you have paid 5% GST. On cancellation, we have come across many cases where the builder has again paid the tax from its own pocket. In fact, they have paid 18% GST. In such cases, if it is within 2 years, then you can still go and claim the refund, because that 18% GST you have not collected from the customer, you have paid from your own pocket, and that is not payable because the tax has been paid once at the rate of 5%. In couple of cases, we have also got favorable order where refund has been granted to the assessee. So there is no need to pay twice, that too at a higher rate. Next issue is with respect to taxability of other charges. See, we know a builder may charge various charges to the customer for sale of flat. There is one for sale of flat, then there are various charges, society formation, clubhouse, all these, car parking, LUC, share money. This is just a summary of what charges will be taxable at what rate. So society formation, maintenance, clubhouse, actually all these are independent supplies, and therefore full 18% GST should be payable on the same. Whereas when you see car parking, legal, LUC, all these are actually directly connected with your flat only. So once these are directly connected with the sale of your flat, then the base rate, which is 5% or 1% GST, should be applicable. Now there are a couple of AR rulings also. One is of Joyville Shapurji and one is of Puranik Builders. So those AR rulings can also be referred. Joyville Shapurji has taken quite a liberal view. Then there is triple AR of Puranic builders where they have taken some charges to be considered as applicable at base rate. So those ARs can be referred. Now, apart from that, there are certain charges like share money, corpus fund, plotted में basic infra, this we have discussed, security deposit. Now see, share money, corpus fund, these are not retained by the builder. This is transferred to the society. So actually this is like a deposit, and also the security deposit is a deposit. And therefore there should be no GST on that at all, not even 5%. All these charges will not be subject to GST. Now suppose along with the flat, as a builder, I'm giving one parking to all my flat owners, right? So that in our opinion should form part of the value of supply construction service itself, and 5% GST will be payable. Now a person comes to me after some time and tells me that I need one more parking. I have two cars. So separately I give him one more parking, which is the right to use parking actually. So what will be the GST on that? See, when a separate parking is given to a customer, not along with the flat which is being sold to everyone, then it's an independent supply. And that cannot be treated as composite supply with my original sale of flat. In such cases, ideally 18% full rate of GST will come when such parking is separately sold. Now, this is also very interesting issue. That is taxability of credit notes issued by BMC, PMC. See, nowadays what is happening, that Pune Municipal Corporation and BMC, what they are doing when they are appointing any contractor for any work, they are not making payment to them. What they are doing is they are in turn giving credit notes to them. Suppose 1 lakh rupees worth work has been done by a contractor X. So contractor X will get 1 lakh credit note from PMC. That credit note he can sell in the open market to a builder. And builder, what will the builder do? They will take that credit note, and suppose they want to buy, they want to pay some premium for say purchasing FSI from PMC or BMC. That 1 lakh credit note they can use for making that payment. So that credit note will be sold by X to Y at a discount. Suppose they are selling that credit note of 1 lakh rupees at 98,000 rupees. Question comes whether this 98,000 will be subject to GST, that 2,000 discount will be subject to GST. So now actually this 1 lakh rupees credit note which the contractor has is in the nature of actionable claim, right? It is, if you see the definition of actionable claim, it covers any debt other means claim to any debt other than debt secured by mortgage of immovable property and any beneficial interest in the movable property. So basically a credit note which is received by a contractor is covered by the definition of actionable claim, and then when the same is transferred by him from say suppose X to Y, then it is supply of actionable claim, and therefore it will not be subject to GST. Also that 2,000 rupees is a discount against that credit note. There is no supply made by Y to X for that service, or there is no actually underlying service or anything, and therefore that 2,000 rupees or 98,000 both will not be subject to GST. See, when the original work was done by the contractor for PMC, at that point of time the contractor has already paid 12% GST on his services, 12 or 18 whatever may be applicable. Now again when he is just transferring this credit note, there is no GST liability. Now last important issue is in case of renting of premises by a builder, the tax liability is very clear, 18%. The question is with respect to ITC. So I'm sure we are all aware of the Safari Retreat judgment and the retrospective amendment. I'll briefly touch upon. See, basically clause C and clause D of section 17.5 restricts the credit of works contract services or goods and services when they are used for construction of immovable property. And in the case of Safari Retreats, the Honorable Supreme Court had held that the that the term plant or machinery is there in clause D and therefore it is different, and you have to see the functionality test, and on that basis you have to decide whether the property which is being constructed fulfills that special functionality test, and on that basis the credit will be allowed. Now all that observation was on the basis that clause D said the words plant or machinery. Now government has introduced retrospective amendment. We are in the 8th year of GST and still we are seeing retrospective amendment from day one. So they have retrospectively amended the words plant or machinery and changed it to plant and machinery. So to that extent, the observation of Supreme Court gets negated by this amendment. I'm not going into the details whether that amendment can be done retrospectively, whether it's a substantive right that can be taken away retrospectively or it will apply prospectively. What is important is that there was one more observation in para 32 of that judgment. In that para, what the Honorable Supreme Court observed, I'll just read the highlighted portion. Construction is said to be on taxable person's own account when it is made for his personal use and not for service, or it is intended to be, or it is to be used by the person constructing as a setting in which business is carried out. However, this is important. However, construction cannot be said to be on taxable person's own account if it is intended to be sold or given on lease or license. So this observation still holds good, that if I am giving any premises on lease, then it is not on my own account. And the retrospective amendment does not take care of this. So when we see clause D says goods or services received by a taxable person for construction of immovable property other than plant and machinery on his own account. So the restriction is when I'm receiving goods or services for construction of immovable property on my own account. But Supreme Court says that when I'm leasing the property, it is not on my own account. So in such cases, a view can be taken that I am still entitled to take the credit of goods and services. See, I'm not covered by clause C. What is important is clause C does not have this own account restriction. But under clause D, I can still claim that I am entitled to claim the credit of goods or services in lieu of para 32 of the observation in para 32 of the Supreme Court. That is not negated by the retrospective amendment. So with this, I think I've covered all the topics, and I hope it was useful. And thank you for patiently listening. We can now open up for question and answers.
Yes, Archit bhai, thank you so much. And there are certain questions which are posted in the chat box. So, would you like to go by chat box or
Yes, I
raising
think
of
we can
hands?
do that. I can see 53 questions.
Yes.
It will take
So
a
the
lot of
first
time.
is GST liability under RCM, if any, in case of rent, betterment charges, etc., paid to the members of the society, which
See,
has gone into redevelopment of society with the developer.
yeah. In our opinion, in case of society redevelopment, there is no tax liability at all under reverse charge because it is not in the course or furtherance of business of the society. And all these charges which the builder pays to the society, rent, betterment charges, this is not for any other supply. The society members are not giving me any premises on rent or any other service. All these are in lieu of the development rights which they have given to me. So there is no question of treating it as a separate supply and paying GST on that.
Okay.
Right.
Next question is, please specify area of 15% means carpet saleable area and what included in
Carpet
exhibit.
area.
Okay, so wash
There
area,
is
balcony
I
area
can
should
see
be
some
excluded
comments
or
with
not?
respect to PPT. I will mail it
Yeah,
on
PPT.
WRC email
Yes, sir.
ID.
So that will
can
be
shared.
available on the website of WRC. Yes.
Yeah.
Correct.
No, we have Bishan bhai, we are creating one
Yes.
group also. So there we will post all PPTs.
Wonderful, wonderful. So
Good
yes,
evening,
Chairman
Ketan ji.
sir.
How are you? Sorry,
All
I could
good,
not.
Archit ji, how are you?
Thank you
Yeah,
very
yeah.
much. Chairman sir is here. So
Yeah.
Chairman sir, please, your words of wisdom, which we
No,
are
I
eagerly
think
waiting to have.
I overheard half of the session only, but it was fantastic. I think the my compliments first to the Indirect Tax Committee Chairman, Bishan Bhai, Vice Chairman, Rajesh ji, for thinking through about this entire industry specific series. And I think it has very well started with Archit ji taking up first very interesting session on the real estate. So heartiest congratulations. I think I'm sure all the days are going to be interesting like this, and people will gain out of the knowledge of the learned speakers. And industry specific program is definitely a meaningful thought, which is brainchild of our indirect tax committee chairman Bishan Bhai. Bishan Bhai, thank you so much for thinking through about this. I don't know whether we announced or not, but we are heading towards the RRC at this month end at Goa. Bishan Bhai is taking a lead, and Rajesh Bhai is again, very ably supporting him. 25th, Bishan Bhai, is it 25? No?
25th, 26th, 27th, sir.
So soon, I think tomorrow or so, the flyer will be there, or probably it is already hosted on site. Yesterday, they were like the backend team was working on hosting of flyer as well as details. So my request to all the members who have joined, since it is your area of interest, the interesting RRC where there will be two paper presentations and discussion will happen on case studies, and then various interesting topic, including some latest case studies and all those things, and area specific case studies, let's say something relating to input or something relating to XYZ. So again, a very, very unique way of conducting RRC for the GST. So request all of you to get enrolled. There are limited seats available. We haven't kept a very large gathering. So requesting all of you to take advantage of this, and please join the RRC, which is being announced by at Goa by the Western India Regional Council Indirect Tax Committee. With this, thank you so much. And again, over to you, Bishan Bhai, please continue your questions.
Yeah, thank you so much, sir, for being here from your busy schedule, because we are aware that how much tied up you are. But again, from your busy schedule, if you have, if you are here, sir, thank you so much. That is what your vision to help membership at large. And again, I want to reiterate that under your able leadership, we all are, able to think, disseminate knowledge, and discuss on various topics so
That
far
is
as
humbleness of Bishan Bhai. He himself,
sir, sir, sir.
has already led the largest branch of ICA Ahmedabad, and equally Rajesh Bhai, who is led as a past chairman, both of them, Rajesh Bhai from Pune, past chairman, Ahmedabad, Bishan Bhai. So Bishan Bhai, this is your humbleness and greatness. Of course, I mean, I
Sir,
am learning from
sir,
them.
this is what I feel, your humbleness and simplicity, because we are also having this GST help desk every fortnightly, and you supported us, you give us a platform to do this type of programs for the membership. So once again, thank you so much, Chairman
Thank you.
sir.
Thank you, sir. Thank you. Please carry on your questions.
Yes. So
Next,
now,
I think is under new scheme, is landowner eligible to claim ITC in respect of 15%? No, landowner is not eligible to claim it. So landowner can claim to the extent of what builder has charged. That they have allowed. Builder is giving the constructed premises to landowner, that 5%, that credit landowner can claim and charge to the end customer, but any other credit he cannot claim.
the next is the
Individual
individual
is
is having rental income. Yes, sir.
individual is having rental income. He purchases land, constructs building office only for the purpose of, can he claim all ITC during construction? See, that depends on what view you have to take on the basis of Safari, that it is for renting out. So that whether that para 32 benefit you want to claim or not, that call needs to be taken. Whether one-time maintenance paid will also be included while calculating 45 lakhs. Yes, that will also be included. That they have mentioned all such charges will be included for computing affordable residential apartment. Is this
So the next
recorded?
is total transfer rights are 1 lakh. How is 2 lakh area taken as base for unsold area?
That is if total area is basically I may purchase TDR from the market from other sellers, and 1 lakh I have got from the landowner. So
Okay.
using those two,
Understood.
I've got total area of 2 lakhs. What is the
On
time of
getting the
supply?
OC, Sir, what on getting the OC, the time of supply will trigger or not?
Yes. So as per 6 by 19, for area given to the society members or landowner, it is on OC. For development rights also, it is on OC, except when cash consideration or revenue share is given for commercial premises. Except that case, in all other cases, it is on OC date only.
So RCM on TDR is input not allowed to builder.
No,
If commercial,
if commercial, then it is allowed.
allowed.
If it is residential, then not allowed. Commercial 12% you can claim.
If you are working option A plus option B, well, but in calculation it was written 72 lakh 90,000. So please confirm, sir. It's your example.
No. Option A plus B nahi hai. Whichever is lower, option A or option B. That 4 by 19 working. That is whichever is lower out of A or B, and A was lower 72 lakh 90,000.
FSI purchase from municipality or
RCM should not
RCM
be
applicable.
applicable. That 243W exemption is available. That we
Lease
are
right,
contesting. Yeah.
lease right,
will not attract GST. Lease, this assignment of leasehold right, no, that will not attract GST.
attract long-term lease by
Long-term
MIDC.
lease by MIDC, if you see Gujarat High Court judgment, they have bifurcated. First leg of transaction is long-term lease by GIDC to company A, and then from A to B is leasehold right. So for first leg, they have said it is taxable. The second leg, assignment of leasehold right, they have held to be not taxable.
But I guess, sir, in first leg also, High Court is silent. They said that they will not give any answer to that.
No, they have in 2-3 paras, they have mentioned that first leg is an entry which get covered by Schedule 2 entry 5, which is a lease of land, and that is a supply. They have said also that is a supply. They have not said that that is taxable or not. They have said that that is a supply, and the second leg is assignment of leasehold right, is an benefit arising, and therefore it is an immovable property.
Yeah, that is clear. That is what I feel. Can we pay GST under protest on development rights till the final outcome of
Yes,
Nirmal lifestyle?
definitely. You can opt for that to avoid interest liability. You can pay under protest, and immediately you should file a refund application. And then on that basis of refund at lower levels, definitely it will be denied. They will not accept that. But at higher levels, if the Nirmal lifestyle judgment, if the Srinivas Realcon judgment, or Gujarat High Court this judgment, all these may get clubbed at Supreme Court level. On the basis of final view, you may get the refund also.
Question 1, on sale, builder is paying commission. On sale of flats, 80% and 20% ratio should be liable to maintain or not?
Yes. On the commission paid to any agent, you have to see whether it is from unregistered or registered person.
Is there revenue sharing model entered with the landowners and project is opted new scheme? Whether the landowner is liable to registration under GST or the GST?
No.
Okay.
No, because it's a revenue sharing model. He's not getting any area. The development rights which is giving is also not liable to tax in his hands, and therefore no need for registration. Section 23 exemption is available.
What rate will be applicable in case of commercial units, in case of JDA, in a RREP?
5%.
5%.
Society issue, please elaborate more. Like they want, but I guess due to time, we can skip this.
Quickly, society
Yes, sir.
redevelopment. You are getting development rights from the society. One is the safe view. You pay GST under RCM by following those method A, method B on the OC date and all that. Second is you don't pay anything by taking a view that society is not in the course or furtherance of business of supplying these development rights. And once it is not a supply in the hands of society, it cannot be taxed under RCM as well for the builder.
If a TDR was done before GST, say in 2013, and the OCS come in 2014, then whether GST applicable on unsold?
No.
Or since the TDR was done pre-GST?
That, see, first of all, RCM applies only when the development rights or TDR is received after 1st April 19, not before that.
Is RCM payable on transit camp charges paid to MHA in case of redevelopment project?
No.
Exemption can be?
This is same in the first query which was
what
there.
we have discussed.
What we have discussed first query, that I'm not receiving any separate supply from them. I have received development rights for what I'm paying, transit camp charges, shifting charges, rent, all this.
Whether RCM, FCM to be paid by developer on commercial space allotted to landowner?
Yes, FCM.
FCM.
Builder is giving the premises to landowner, FCM on that.
If FCM can be explained again. So I guess what we have discussed, we have covered. Will there be RCM on the development right?
Yes.
Yes. How is it possible to bifurcate the value of clubhouse? Developer never sold clubhouse along with the plot. It is always handed over to the society.
See, the clubhouse is finally handed over to the society, but the agreement says you will get the clubhouse membership, you will be allowed to use and all that things. So, in my opinion, it will be very aggressive view to take, in my example, which we gave, that 1 crore towards sale of plot is entirely not taxable. And more so, I will tell you, if you take that view, anyways, you are not entitled to any ITC. So in the entire plot of land, you will not get any ITC. So it is better we compute that cost plus 10%. On the cost, you will get all the ITC of 18% fully. You are adding markup of 10%. So your net effect is only 1.8% of the total value of those other charges. Only that
And
is
sir,
the
is it
hit.
also possible to sell this clubhouse or construct this clubhouse for the society exclusively and by the developer?
Practically, I have not seen Bishan by as
Yes,
a
yes, yes.
practically this never happens. So
Now coming to the next, whether a customer can claim refund of GST paid to a builder at the time of booking on flat which afterwards cancelled or
yes, yes.
forfeited.
Law, in fact, the circular is also there for that.
Yes, yes.
The recipient should claim the refund.
Whether ITC can be availed in respect of RCM paid in case of supply of development rights by builder and use it against GST payable on supply. Commercial, I guess we have answer. For
Yes,
residential,
we have already answered.
we don't. In GST, is GST leviable on transaction supply of same American?
Same as same.
PPT, yes, we are going
Yes,
to
yes.
share.
PPT I will share with WIRC. They will share it with you.
If there is a revenue sharing model entered with the landowner and project is opted new scheme, whether landowner is liable to registration under
This also
GST
Repeated
we
question,
discussed.
repeated question.
after received of वो भी ये भी repeated है क्या? After received occupancy certificate of the building, if any expense is incurred after the OC, whether 80% or a 20% ratio liable to be maintained?
This is interesting.
Yeah.
It says that you have to compute for each financial year till the OC of the project. So ideally, once you have received the OC, then you need not maintain this 80-20%.
Yes. Suppose on sale builder is paying commission on the same sale
This is
flats,
covered.
ये
This is
covered है.
covered.
In both cash and residential units plus commercial, then also time of supply is OC date.
No. So what I understand is you are getting development rights against which you are constructing commercial as well as residential, and you are also giving some cash consideration. So you have to apportion. You have to apportion the area used for commercial, and you have to apportion the cash value also. And to that extent, the liability will be upfront and not on OC date.
So many of them are basically on revenue sharing or something like that. So I guess it's a repetitive only. And as chairman sir said that we are going to have a group as well. So if your any query is yet not answered, then we request participant to post the same in that group. So we will get answer from the faculty, and we will also
Vision
request
by, if we have
faculty.
5 minutes, we can quickly take
Yeah,
up.
then it's better, sir. It's better.
Because there are few queries. Let us take up and
Yeah, please.
plot of land taken on lease from MIDC is further given on sublease. Plot of land is 1,000 square meter is open as residential building for which OC will GST will be applicable. Will be taken on is further given on sublease. What I understand is the plot of land along with some standing building is being given on lease for which OC is received. So is this given on lease? Is it commercial? Yes. So GST will be applicable on the lease transaction.
Then if we do not rely on Basanta Green, then what is the time of supply? That is at the time we are supposed to pay GST on flat supply to existing flat
OC
owner.
date, OC date.
OC date. 80-20 ratio for input is
All
calculated
the
for all
year,
year.
for each year separately.
Time and value of development rights with respect to commercial apartment.
Value of the time and so time is if it is against area share, then time of supply is OC date. If it is revenue share, then time of supply is agreement date. Value will be if it is revenue share, the value will be there in the agreement. If it is area share, then ideally first sale price should be taken. Although first sale price, that notification 4/19 is for residential apartments, but same logic can be applied even for commercial apartments.
So our participants are thanking you, sir. So that
Thank you.
right is vested with our vice chairman, sir, Rajesh Bhai.
Yeah.
If there is a revenue sharing model entered with the landowners and project is opted new scheme, I guess we have discussed this, sir.
Discussed,
yes.
already covered.
Covered.
Flats given back to landowner after redevelopment are not taxable, right? Whether it is taxable on as construction service.
Yes, yes, flats given to landowner are taxable in the hands of builder as construction service.
Yes, in the revenue sharing agreement where landowner is charging
Fee
fee
and then developer is charging for. I didn't
for,
understand.
sir, it's a charging for land and developer is charging for construction. Then GST how to determine? As Munjal Bhatt, sir, you have explained, if there are two separate agreements.
Okay. That view can be taken.
Yes. The proprietor firm is registered under the GST under works contract services. He also undertakes construction of his bungalow for his residence on which we will not claim GST. But can we decide not to give the GST registration?
Yes, it's a procedural thing. You may not give that GST number. That is for your personal use. It is
In
not mandatory to give your GST number
GST
just
number.
because you are registered.
In the redevelopment case, builder gives area to tenants. Is that chargeable under GST or any such case study on this?
Yes, it is chargeable. Section 7 is the charging section.
Charging section.
Supply basically, not charging section.
Sale of incompleted project as is where is basis without construction agreement, is that liable to tax GST?
No, that
It's a immovable property. That is what we can.
that is immovable
take.
property. That High Court ruling has also come recently. I forgot the name. On this exactly same issue, High Court ruling has come.
So can you please brief on GST registration, whether it's project wise, company wise?
No,
it's
PAN based. So
PAN
each
based.
PAN under each state, if in the same entity you have multiple projects, then you will take only one GST number.
But you can get separate registration project wise as well or building wise.
No, now it is vertical business, place of business wise or business vertical wise.
Okay.
I
It is
have
for
used it.
different segment. The wording is segment.
Different
If
segment.
it is the different segment, you
So
can go for separate registration.
this may be same segment if you are having two separate buildings at different area.
Why builder is not allowed to take ITC?
Because
Only
builder is given the option nahi, but builder is now charging only 5% GST.
5%, yes.
So that is why the ITC has been taken from
additional FSI purchase from municipal corporation.
no RCM applicable. You have to fight it out because of 243W exemption.
Excess ITC of commercial project A can be
Yes. There
utilized.
is no
It's a
such
PAN-based.
restriction.
GST rate on development rights on commercial area in case of RREP project.
Now, GST rate on commercial area is 18%. In the end, you have added in case of RREP project. Now, there is a debatable issue that in case of RREP, a view can be taken that even for the commercial area, I need not pay GST and I can claim the exemption even for the commercial area because the commercial area is treated at par with residential area. So one can take that view. We have taken that, in fact, for some of our clients, and that is based on the various council discussions and the minutes of the council meeting. That their idea is to treat in case of RREP commercial area as par with residential. So in such cases, In fact, there is no need to pay GST on development rights. Only to the extent of unsold at the time of OC, the tax liability is to be paid. Whether a customer can claim refund of GST paid? Yes, customer can claim. For redevelopment project for extra sale to tenants, whether GST? Yes, for extra area, GST is payable. Whether RCM on TRDR to be paid for commercial construction? Yes, RCM is applicable. Whether RCM on, unless it is for lease only and you are not a promoter. In that case, it will be FCM. Whether RCM, yes, same. PPT will be uploaded. So
revenue sharing model. Landowners
Yeah.
has to take GST registration under GST. There is no exemption under 23.
No,
Yes.
in my opinion,
Yes, sir.
there is no supply which is taxable in their
Taxable.
hands, and therefore it is not required.
Again, members are thanking you for
Thank you.
your deliberation. For the redevelopment project for extra area sale to tenants, whether GST
Yes,
applicable?
yes. RCM applicable on additional FSI. If you are buying additional FSI from the market, from any landowner or any supplier of TDR, then yes, RCM is applicable. Unless, of course, Srinivasa and all these judgments are there, we are keeping that aside. And if you are buying that additional FSI from BMC by paying premium, then it is exempt under 243W.
Post 1st April 2019 in area sharing, JDA, can we assume landowner has no formalities with respect to GST registration, etc., if he is not selling to outsiders?
Yes, if he is not selling, not required.
In RCM on additional FSI,
This we have discussed.
we have discussed. Under redevelopment,
This also we
tenant
have
gets,
discussed.
yes. Someone has given a comment, Rohan bhai, that now it is not segment for segment wise
Separate
registration.
place hai kya? Business vertical or place mein I am a bit confused.
I guess, sir,
No,
it's a
segment
place.
one they have removed now, and
Yes,
now
it is
allowing for
place wise.
as per different address.
And sir,
Okay.
yeah, I'm eligible. That is what.
Yeah.
Okay, right.
Okay.
RCM on unsold at the time of OC section, also case study.
See, for real estate, I'll tell you, just read 4 notifications, 3/19, 4, 5,
4, 5,
6.
6.
These are the entire Bible for real estate. Although it may sound very simple, but these are long notifications with lot of complexities. But that is the base if you want to study and read.
So next is whether TDR for hostel come under residential or commercial.
Commercial.
Commercial. Residential is different. This is for commercial activity which he is going to use. Residential maybe after the hostel is built for that particular person.
Sir, you need to repeat the notifications which you have just.
3/19, 4/19, 5/19, 6/19. All these are dated, I think, 29th March. 29th March 2019. All these 4 notifications.
Yes. So I guess we have also completed the questions which were posted in our chat box. And I request Rajesh bhai to please give well-deserved vote of thanks. Though our members appreciate it.
Thank you so much.
No, really great session, sir, because the topic itself is very deep and also very complex. You made it very easy, and I think you have covered all aspects in real estate with case studies. Really appreciate. As respected speaker, my indirect tax committee chairman, dynamic chairman of WARC, Shah madam, and my technical team. Also, all the participants who are actively participated in this session. I thanks to all of them for your active supports and make this successful. The huge response from the members really appreciate in short of time. We have declared just a week before this series, and we have received very good response from the members. Thanks to all the members for your active participation and giving. Also request you to also register for Goa RRC. This is a good initiative from WARC. Many times member tell us कि BCA RRC बहुत अच्छा था, वो चेंबर का RRC बहुत अच्छा था. And at par and better than that, we have structured the RRC. Bishan Bhai has taken so many efforts to structure this program. So request all members to go through this structure and register for RRC. Very few registrations we have. Thanks to everyone for your support to complete this series. Thank you.
Thank you. Thank you very much, everyone.
Thank you, all the
Thanks.
dignitaries of WRC. It was pleasure. Thank you so much.
Brother. Thank you.
Thank you, Labdeep. Thank you.
Okay, bye.